ABC 7 business commentator Richard Stern joins us now with a check of the day on Wall Street. We're starting a new month and it's a down day.
We're starting a new month, we're starting a new week, we're starting a new quarter. Yes, indeed. It's the first day of the second half of the year. And how are we doing? Well, not so well, although we're doing a lot better than we did at the open. The Dow Jones Industrial Average was down by 194 points in the first 30 minutes of trading, mainly as a result of, yes indeed, tariffs. Yes, no, what country? To be announced. In any event, we're looking a lot better now than we did at 10 o'clock this morning. Let's take a look at the figures. The Dow Jones Industrial Average down by 91 points, just not quite 0.4% at 24,180.73. That on volume of 314 million shares. The NASDAQ down as well. There's a down arrow, down 13 points, not quite 0.2% at 7,499.16. That on volume of 608 million shares. And if they're down, yes indeed, so's the S&P. The S&P down 9 points, 1/3% at 2,709.59. Well, as I just said, we've finished the first half of the year going into the third quarter. So if you remember, January was terrific. Hasn't been exactly terrific since. So let's take a look and see how we've done for the first 6 months of 2018. The Dow Jones Industrial Average, despite a terrific January, is down by 0.7% for the first 6 months of the year. The NASDAQ, which has been the real leader in the marketplace, not as high as it was, but still up by 9.4%. Certainly, if you annualize that at more than 18%, you got a lot of happy investors in that case. And the S&P, which is the best single indicator of the market, up 2.6% year to date. And if you annualize that at about 5.2%, and we certainly can't promise that, but if you annualize that at 5.2%, that would be under the historic rate of return of the S&P 500. Scott, that is typically plus or minus about 7%.
Okay. Still a half a year to go.
You got it.
Yeah.
Exactly.
All right. Richard, thank you. We'll see you at 5.
Yes.